Warren Buffett was a man who went from modest beginnings to becoming the sixth richest person in the world. With a mind-boggling net worth of $118 billion, Buffett's wealth may be currently affected by the market crash, but there's no doubt it will rise again in the near future. Warren Buffett started with just $1,000, and Buffett worked his way to become the richest man in the world in 2007. His expertise in investing is legendary, and his mindset is truly priceless. It can't be bought or replicated. Buffett's journey is an inspiration. He began with humble jobs at a young age, and by studying his life, we can learn many valuable lessons. The book, The Snowball, Warren Buffett and the Business of Life, provides a detailed account of his life, and the book has received numerous awards, including Best Book of the Year in 2008 by The Washington Post, Financial Times, and other esteemed publications. Are you ready to learn the most important lessons from the life of the world's smartest, richest, and most experienced investor? We'll delve into Buffett's approach to investing and give 9 key takeaways of how he's put his concept into practice in the real world. If you're ready, let's delve in. Takeaway 1. Put quality first. Buffett avoids investing in garbage. He rarely buys failing companies, regardless of how inexpensive they get. Among the best quotations from Warren Buffett that novice investors can remember, it's more advantageous to buy an outstanding business at an acceptable cost than a fair organization at a terrific price. On rare occasions, Buffett would spend the weekend at his father's workplace, cheerfully writing down stock price figures on the wall-sized whiteboard. He had saved $120 by the time he was 11, which was a sizable sum in 1941. He made his first investment with that cash. He purchased 6 shares, 3 for himself and 3 over his sister Doris, of City Service Preferred. Takeaway 2. Try to find a safety buffer. Buffett's approach to investing is based on putting a margin that is secure first. A margin of safety, put simply, is a feature of a stock that aids in preventing investors from suffering financial loss. A $2 margin of safety exists, for instance, when a stock is trading at $10 per share, while the business's assets are actually worth $12 per share. The asset's intrinsic value should guard against a severe decline in the stock price of the company. Buying a firm for less than its true value is always Buffett's objective. As he puts it, a too high cost of purchasing for the shares of a wonderful business could reverse the consequences of a future period of favorable business advancements. Takeaway 3. Do not be afraid of market declines and crashes. Although buying low and selling high is the obvious objective of stock investing, human nature often drives us to make the opposite decision. We feel motivated to work toward financial independence when we observe all of our peers as successful business people. It's also in our tendency to sell our shares as soon as a market meltdown occurs to avoid future price declines. Buffett enjoys stock price declines because they present opportunities to purchase at a bargain. This helps to explain why 2022 was a very active year for Buffett. Would you panic and flee if you were in your favorite store when you saw all of the prices had been reduced by 20%? Obviously not. Buffett embraces stock reductions and declares, "Opportunities don't come along very often. Set out the bucket rather than the thimble when it starts to shower gold." Takeaway 4. Stay away from the crowd. Another piece of advice from Buffett that is crucial for beginning investors, particularly in the era of Reddit message boards, is as follows. A stock shouldn't be purchased solely due to the fact everyone else is. However, you shouldn't constantly try to be the opposite and sell the assets that everyone around is purchasing. The greatest method to invest is to completely ignore the herd and concentrate on identifying value on your own, like Buffett does. He adds, temperament, not intelligence, is the most crucial characteristic for an investor. You require an attitude that neither enjoys being with or opposing the crowd greatly. Takeaway 5. Consider the long term while making your investments. One of the most significant quotations from Warren Buffett on investing is, "If you aren't prepared to purchase an asset for 10 years, then you shouldn't even think about purchasing it for a mere 10 minutes. He doesn't pick stocks only based on his expectation that they would appreciate in value this week, the remainder of the month, or even the entire year. Buffett invests in equities because he intends to hold on to the companies for the long run. Although he still regularly sells equities for a wide range of reasons, he approaches the majority of his assets with the intention of holding them for the long term. A set-it-and-forget-it investment like an S&P 500 index fund, according to Buffett, is one of the best investments that most people can make if they can't adopt a forever mindset with their equities. Takeaway 6. Learn the basics of value investing. Warren Buffett is widely considered to be the world's greatest value investor. Value investing prioritizes paying low prices for investments relative to their intrinsic values. The basic objective of a value investor is to purchase shares of a firm for less than $100, ideally, much less. Value investors look for and invest in businesses whose intrinsic values are significantly higher than the suggested enterprise values reflected in the costs at which the business's stocks are traded. Value investors like Warren Buffett anticipate that the marketplace will eventually realize a company's full value, leading to an increase in the stock price of the business and a profit for an equity investor. Takeaway 7. If the circumstances change, don't be scared to sell. Warren Buffett is known for saying, "The most crucial thing you can do if you find yourself in a predicament is to stop digging," in response to a question about an investment he chose to sell at a loss. While he undoubtedly hopes to own every asset he purchases forever, outlooks do shift. You might be surprised to find that Buffett invested a significant amount of money in the mortgage company, Freddie Mac Inc., FMCC 0.18%, a few decades ago. However, a few years ahead of the 2007-2009 financial crisis, he became concerned that the lender's management was beginning to take unwarranted risks with the capital of the business and made the decision to sell. Buffett made a wise choice, which was made abundantly evident when the global economic downturn struck. Takeaway 8. Recognize compounding. Possibly the best illustration of the effectiveness of long-term compounding is Warren Buffett. Buffett benefits from the power of compound interest, payments of dividends reinvestment, and the ability to continuously reinvest operating cash flow produced by Berkshire's businesses. How effective is this? Since Buffett took over in 1964, Berkshire has generated an annualized return of 20.1% on average, versus 10.5% that of the S&P 500. This might not sound all that remarkable until you consider that over a period of time, this has led to a total return for shareholders of 3,641,613%, as opposed to merely 30,209% regarding the S&P 500. Takeaway 9 study, and think about it. In his place of work in Omaha, Nebraska, Buffett frequently works long hours. He spends the most of his time alone, reading, or doing nothing at all, which frequently shocks investors. According to a comment from him, "I insist on an extensive amount of time to be spent, on a regular basis, simply to observe and think." The gathering of as much financial knowledge as possible, in Buffett's opinion, is a key factor in his success. He sees knowledge as an asset that grows with time. The Snowball teaches readers about ethics, the stock market, and Buffett's prescient foresight in addition to being an entertaining biography about an interesting man. As a whole, Buffett steers clear of investments he doesn't fully comprehend. He is aware of his areas of strength in stock selection. By adhering to the principles you know, you can make investments like Warren Buffett. To get the latest informative videos, like and subscribe to our channel now. See you in the next video.